North America. Good morning, good afternoon, and good evening. It is another fun-filled day. It's Tuesday. Stock markets are going up like zoom, zoom, zoom. And let's see. Yesterday they were trying to go up zoom, zoom, zoom. I forget if it was 47 or I forget who was asking about the idea of like a Christmas rally. Well, they're in daily buys, that's for sure, for the last 2 days now. So half of them were in yesterday, and then the rest of them are joining in today. But the weeklies are on, the weekly sells. So this is probably like the dead cat bounce. More than likely it's what it is. That's what it is, the dead cat bounce. But we'll see. Again, remember they're trying to pass some crazy another $4 or $5 trillion budget. Or not budget, I'm sorry, forget about budget, a bill. Not even a budget, it's just a bill. They're doing an ongoing resolution when it comes to the budget. And so, what we're seeing is they need, this. They need that do-re-mi to come in. They have to do this. In other words, they have to show strength. And don't worry, inflation means nothing. Bonds can trade at 1.25, 1.5, and we have 6% inflation. Remember, this whole thing is, just smoke and mirrors, I guess. That's the best way to describe it. And so we've been going through it for 13 years, since 2008. So not much of a surprise. You can see here the Swiss doesn't seem to be taking it too serious this morning. It's moving up, so they're buying dollars for this adventure, as you can see right there. Can you see right there? Yeah, you can see that right there. Yeah, you can see that. And then over on the, let's see, let's minimize that. And what is that all about? Let's cancel that. Cancel that. There we are. Cancel. And right, I guess it would be right. Where is that? Oh, I don't see it. Okay, we got to open that up. I was going to say, where's Chicago Quant? I'm looking for Chicago Quant, and I don't see it. So, over on Chicago Quant, I'm looking at it on another screen, and I'm saying, well, it's unchanged, so it's the second day in a daily buy, and it's just kind of cruising along. And it's holding up in its weekly buy. They tried to take it underneath last week. We talked about that. All right, there we go. You'll see that in a few seconds here. There it is. So you can see right there, the dollar Swiss pairs trade yesterday made a nice move up, and playing with the top end of that range. It's not outside of it at the moment. You can see how that last week weekly just bounced on the edge of its chin and then lifted up. So they're buying dollars. They buy dollars because it's the only game in town, or in this case, it's the only game on the planet. I mean, you have some small countries that have some great opportunities in the pairs trades, but overall, to be invested in dollars is to be invested in what people want. In other words, I guess the old expression about owning what people want, or location in real estate, or why do they rob banks? Because that's where the money's kept. Things like that. It's that same story. Why buy dollars? Because nobody else can hold their own currency that firm for that long. Because that's what it really comes down to. As we talked about it yesterday, it's an odd story. It's a very mystical story. It really is. Let's get the fact check spreadsheet up there. It's like a mystical story. It's like if central banks around the world are printing money, why don't they print enough? Why do they borrow from the Federal Reserve at the same time? Obviously, I'm sure they don't do it for bad accounting. So they must do it because they're told to do it by the Federal Reserve. I don't see it any other way. If you're printing 60 billion euros a month, why do you borrow at the end of the year some money from the Federal Reserve? Wouldn't you just add an extra $500 million every month and then have the number that you need at the end of the year? If you were independent, you would. If you're not independent, obviously no. Don't fight the Fed. Exactly, middle age. That's one of the greatest, one of the first lessons I learned as a young kid on the trading floors. That's exactly it. Don't fight the Fed. If the Fed says they're going to go do that, then go with it. If your daily quant flips back to the sell in the indices, I might buy some puts, but like you say, don't fight the Fed. Yeah, exactly. And it just seems like the tenacity, the hunger, the strength of it is just uncontrollable. I mean, it doesn't look like anybody can control it and stop it. And when I mention this stuff about the idea that at the end of the year, central banks will actually borrow money for short-term money for 3 or 4 weeks to balance out their accounting sheets for the year from the Federal Reserve. What does that mean? I mean, how aggressive is the Federal Reserve against other countries? It must be enormously aggressive when we don't see it. I'm going to take a sip of tea after that one. And I'm going to leave it at that. All right, where do we go from here? Let's check out the euro. And there's the euro on the Chicago quant. You see that right there. You see that weakness for a couple days now on the sell right there. We've been in a weekly sell for, as we say around here, since the cows came home. Let's see. Let's take a look at it right there on J4X. As you can see there on J4X, like you could see on the J4X with the dollar Swiss, how the white line was going up. You see the same thing here, how the line is going down. So obviously, the dollar is the bomb. It's the place to be. And fighting the Fed is, illogical. And, for currency traders, I say this a lot in the webinar. I say that, the consistency, the technical analysis has never been better. The trends have never been better. They stay consistent much longer than, any other product out there, which is really impressive. Yeah. I mean, when you look at the trend, you look at a chart. I mean, in the case here, you're looking at, what is that? That's looking at the euro. So it went into a daily sell right there. Oh, no, you can't see that. You went into a sell right there, right? Right there. And look at the trend. It stayed in that trend for a while. It fought with it, playing with the dots and doing a lot of different things. But finally, it goes into a daily buy for one day down in here. We're in a weekly trend starting back in here. And it fights with it. Of course, lines go up, they go down, but they refuse to go into the confirmation of the trend has changed. And, then they go do it again. They smack it, doodle it there. It tries to get into the buy there, and that's a pretty good one. For 3 days, it's pushing up. They're trying. And you can see the weekly is basically down through it all. It might have been lifting up somewhat like, the shorter ones, but in the end result, it stays in the trend on the downside. The trends have been your friend in this product. When I mean product, I'm talking about the Forex market. The Forex market is really consistent compared to all the others. I mean, was it 47 asked us to look at the GBPJPY every so often. And boy, does it, it trends for 4, 5, 6, 7 days. It's nice to get into a position that trends like that. And that is really the whole game, Now, how free is that money that the central banks give them? I don't know. I guess it's like bribery, It's not exactly free. It's like, well, we'll lend you this. We'll pretend you're going to pay $500 million, but you don't have to pay us the $500 million. Just keep the system functioning the way we want you to. I think honestly that's what we're really seeing when we see that end of the year or lending that goes on by the Federal Reserve to other central banks. And at the same time, those central banks are printing money like the way the Federal Reserve does. So obviously they're doing it under the guise, in other words, under the control of the Federal Reserve. I don't know how else to look at it. I always like looking at physical evidence, I need physical, not theoretical evidence to justify a statement, and that is one of the only ones that jumps out at me, like literally like pop goes the weasel. It's like, wow, they do that, don't they? So, and like I said, How hard is it if you're printing 60 billion euros a month? How hard is it to not just print 61? You know, at the end of the year, you don't have to borrow that money from the Federal Reserve. So, it's A, you have really bad accountants, and someone's not looking forward to where they're going to be in 8 or 9 or 10 months, or the Federal Reserve is really running the whole show of the planet, everything. And they're saying to you, you'll print 60 billion a month, we'll watch it. If you go less 63 billion, that's not good, that's manipulation. If you go down to 51 or 55 billion, that's not good because you're not keeping the system balanced, you're not part of the gang. You know, and that's the only way we can look at it. I don't have any other way of looking at it. I mean, I would love to have a better opinion about an idea of what we're watching every day live. But I don't see, I just don't see it. It's odd. You know, and it drives me crazy. It drives me cheese and crackers. Alright, from there let's take a look at the cable. Boy, you know, when you go over to the fact check spreadsheet, and you see right there, I hate when it does that, so I have to hit upload, and then it gives me a chance to get rid of it like so. No, go away, shoot. And when you look at it over here on the fact check spreadsheet, you see, you know, cable. Where's that? Right. Oh, there you see. There you go. You see, 2 days in the sell. We're on a third day when it comes to the euro. Now look at the cable. We're 5 weeks in the sell, and interesting too. The euro is 10 weeks in a sell. Now you got the cable 5 weeks in a sell, but 12 days in a sell. So going on, you know, 3 weeks now in a daily sell. Let's take a look at it there, and you can see this thing's just dragging down to that. I thought that was one. Yeah, that's right. It is. I guess 131, basically 132. So on what was that Friday? They tried to bounce down to it, missed it by about about 15, 20 pips. I guess it is. You see 31.91, and the low there is 20. Yeah, so I don't know, 20 some odd pips. It bounces around, but look at it. All that weakness, all the weeks in a weekly sell, going on a 6 week now. But it's not too bad. You know, it's not too extreme. Just is what it is. So I guess the best I can emphasize here, traders, is that currencies like to stay in trends more than any other product. I guess minus the stock market here in the States. Boy, did they run that thing in a trend all the time. Both of them are in trends. You would assume that they're the smoke and mirrors that they need, you know, to be able to turn around and say, oh, don't worry about that transitory inflation. Now that they've gotten rid of the word transitory, it's like, don't worry about stocks. You know, don't worry about the borrowing and spending that we want to do. Don't worry about it because look, stocks are going through the roof. Private money is roaring in, coming in, buying like there's no tomorrow. When in fact we all know that the Federal Reserve is the big buyer. That's what it really comes down to. The Federal Reserve is the big buyer of stocks. The Federal Reserve is the big buyer of bonds. And the Federal Reserve is the big buyer and seller of currencies. So we used to describe it years ago on the webinars as a one of those cowboy movies, you know, where they found gold or silver or copper or whatever, and everybody runs to those towns, and you know, you want to buy a shovel, and the shovel costs like you know, a year's income. You know, because all you need is a shovel to dig to find some of the gold or the silver or the copper, but there's just not enough tools around and not enough food around, and so the prices are just right through the roof. The inflation has exploded to just for potential success, and so it's one of those company town situations where, you know, you want to have a dinner, it costs you half a year's normal income, but obviously if you discover some gold or silver or copper, then it's just like a day's income. And so that's what we're watching right now. This is a company town. This is a company planet, and the company is Federal Reserve Inc. I might be one of the only people that takes apart the Federal Reserve's actions every day, or at least I talk about it every day. And at the same time, we talk about the markets in general and the direction, and we're probably like one of the more accurate. I know we're one of the more accurate indicators out there. So, if not the most accurate indicator out there, just our tools itself. And so it's an odd thing every day to look at the planet and see how everything is transacting. And when we come down to the end of the year, it's even more fascinating to see the wild action. I mean, let me just show you what the stock market is doing today. I mean, it's just ripping along. Dow Jones Industrial Average up 349 points. The Tech 100 over here is up 285. It was up over 300 points. And then you can see the Russell 2000, up 34 points, which is a big move for an index that's only 2,200 compared to the other two. This one over here up 300 points almost is a 16,000 index. The Dow Jones Industrial Average is trading at 35,000. It's up 350 points. And then you see the S&P 500 right over here on the bottom right corner. That's up almost 60 points, and it is a 4,600 index, twice the one on its left over here of the Russell. And so, you can see if it's twice, this thing, if you double the up 35, it's 70, whereas this is a 60, And if you double the Tech 100 that's on Dukascopy there, the Nasdaq 100, it's up almost 300 points, and it's a 16,000 index, whereas the Dow Jones Industrial Average is a 35. So you double that, it's like almost 600 points up compared to the 350. So there's a lot of fascinating things that sits in front of our face and for us to understand and appreciate. All right, let's head over to. We've done the cable now. Let's do the Turkish lira and see what they're doing there. And there it is right there this morning, kind of hanging out at the all-time highs. Nothing major going on. The daily is trying to hold up pretty well in here. You can see the weekly, is just, guns blazing up. And then we slide over to the J4X, and we'll take a look at it there. And we're going to slide down to the euro yen from there. We like doing that. The euro, not the euro yen, euro Turkish lira. Because it's a really insightful, really accurate tool to watch to be able to trade the Turkish lira. It's right, where are you? Right there, there we go. You can see that thing's just marching along. A little weakness here today. You can see a little red dot. And it's the weekly buy since back here. The daily buy since right here. Boy, that last one was what a ride that was, huh? Zoom. And a little selling didn't mean anything. It was like you gave money back, but you couldn't take a short anyway because why, traders? We're in a weekly buy. So don't do that. Just don't be long, that's all. So you miss a little. No major shake there. And then it goes into the buy again. And you can make, it goes to all-time highs 2 days later. So, interesting times, interesting products. All right. From there we go to the Canadian. Canadian slid into a daily sell yesterday. Maybe something's going on there. It would be nice to see. It was heading towards the top end of the range there, which is pretty high up. So, and we've been in that weekly buy since over here. And we've been in the daily buy 2 days before that. So finally, we slide into a daily sell there yesterday. It's a whole 1 day and a sell right now. Let's get that up there. I'm going to the wrong one. That's why. There it is. There we go. So there's our first sell since back in here, all the way back at the beginning of the weekly trend. When it did it there, we got a red and a green, so you couldn't take the short there. And this one gave us a green when it tried to do it there. So it's been in a daily buy since right here. Oh, you can't see that. So it's been in a daily buy since all the way back in here. Right there, 2 days before the weekly confirmation. So it's been an interesting ride, and now it's digesting, taking a breath, however you want to describe it. But the Canadian is trying to do a little backing off. Got a lot more work to do on the weekly to get it to go, that's for sure. Now from there, we zip over to the gold and the silver. We'll take a look at that and see what's going on there. And then also just a quick look on the J4X, just to confirm the action we're seeing, that it's working with our J4X program. So see that? Red, 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 and white line breaking the dashed line. Seeing both of those. So at least it's it's showing you that the nice tool that we developed for the J4X is a fine tool, better than the MACD, better than the RSI. And that is that. Now let's take a look at the metals complex. Let's see, there's that. Okay, let's go to gold. A little strength there in gold. How about that? Let's see. Right there. See that right there? We're showing a little strength there. White line is through. Let's see, what else can we say about that? Let's see it over on Chicago Quant. Nope, that's not it. There we are. Doing the same thing, it's trying to turn up. Weekly, playing with the weekly sell right now. Matter of fact, is it above or minus? It's still minus by the hair of 25 cents. It's at 27 cents now. See that there? Little box will change. Minus 0.27. And when it moves again, it'll change again. So we're trying to do a little positive action up here. We've been in daily sell since this thing here. And been in a weekly buy since back here. So it's a real sloppy action for the end of the year. Let's see, what else can we say about any of this? Not much, I guess. Just that it's trying to turn up a little bit there. That's kind of neat. So now we'll take a look at the crude oil. See what they're doing there. And there it is, crude. Crude's doing the same thing, showing more strength. A couple days in a buy. The back month, we'll take a look at it when we come back to this complex. But the June contract has been in a daily buy for 3 days now. And you can see the weekly is trying to make its turn. We'll see how that goes. Take a look at it over on J4X real quick too. Right there. All right. Turning up, just like here. Just like there. Okay, from there we slip over to the South African Rand. And since we're seeing oil lift and we're seeing a little gold action on the firmer side, we would think that South African Rand right now is trading on a, what would we call it? I guess a sideways up, maybe? Maybe it's not falling as much. Let's take a look and see. If we can find it, where's the czar at? There it is. And the answer to that question is, yeah, it's up a little bit. It's going up. We're thinking it would be sideways down, but no, it's going up. See it right there. I'm getting that little bounce there. And we've been in that buy now for a while, back in here. All the way back in there. Right there on J4X. White line doing the same thing, trying to pierce up. Had that selling going on with the red over here. You can see that. You can see it right here on J4X. Now, let's see. From there we go to the ruble. Oh my God, the stories over and over again. Our socialists hate the old socialists. So it seems to be the answer as well. And there you go, right there. You can see the ruble starting to move up. It's what is it? 1 day in a buy now, going on a second day. Where's the ruble? Yeah, 1 day in a buy there. 4 weeks in a buy right there, as you can see. And it's finding a way to go up. And like I said, it's our socialists here in the United States who hate the old socialists of Eastern Europe. They really battle with each other. Supposedly Biden's on the phone with Putin today doing something, I'm not sure. Wishing him a happy little Christmas, I have no idea. Anything's possible with Biden, if he even knows it's Christmas time yet. Alright, so there's the ruble. Let's take a look at the yen. There's the dollar yen. Obviously Mr. Dollar is the strong point here. You can see that 2 days going on a second day at a buy. Look at the weekly, it's trying to turn up. It'll be interesting to see if 47 comes in and we go over and look at the GBP JPY, see how that's looking. And you can see there's the yen on the fact check. 3 weeks in a sell, 1 day in a buy, and you know, so it's trying to turn back up again, which means strong dollar in the end. Because the Federal Reserve wants it to be strong, it will be strong. And then the last one we look at is the Mexican peso. Right there. Kind of stalled out the last couple of days. You got a lot of red going on there. The weekly's been in a weekly buy for a couple of weeks, as you can see. 3 full weeks now, going on a fourth. And you can see the daily is trying to turn back up again. We'll see if it really gets any legs on that. We don't have that up on the fact check spreadsheet. So. What else can we say? Oh, let's do this. We'll take a look at it on there too, on the J4X, right there. It's been interesting. A whole new range has developed. We'll see. You know, it's a combination of the policies of Mr. Biden and what's going on in the North American continent economically between Canada, the United States, and Mexico, that type of thing. Mexico is some type of way station at this point in time. So it must be benefiting from it all. I would think it is. I would think so. Indeed I do. Let's see, what else? What else can I say? All right, from there, let's see, what do? We go from, that's it when it comes to the currencies. Anybody want to see anything in the currencies? If so, say so, and we'll jump in and take a look. Let's see. Let's see, what else can I say about anything on that sector? I guess what we do now is we go over to the metals complex and we'll take a look a little bit closer to that. Like we'll take a look at silver, and we'll take a look at back month oil, things like that. We'll take a look at. Let's see, what do I want to put here? I'm going to put the silver in. There we go. Check out those things. See what's going on. There's the Jan oil. You know, let's put Jan oil, or let's put the oil in the, right there. Let's take a look at the oil. So you see it's trying to perk up, like you know, J4X and us are matching up, which is nice. And then you can see, let's go to that back month. Right there. There's the June contract, and you can see that's even happier. But then the front month, we talked about this yesterday, the front month really got knocked down hard, you know. It really did. There was a lot more aggressive action than that, you know. And that's where you can see there, that strength, just a day ahead of the front month. But the weekly's so far down, doesn't seem to have much hunger to get going. See, daily's there. Let's see what the weekly looks like over here. There's a weekly on J4X. And it's doing the same thing. It's trying to turn like us, but it's not getting there yet. And you can see the strength it's trying to build, but not yet. And then let's go over to the silver now. Let's take a look at the silver. We can jump back and forth from energy to metals, that type of thing. Do a little inspection of what's going on in the metals complex. Then we see here there's silver. So let's take a look at Silverado on here. Silverado. It's moving up. We got it to move up. As you can see, the line's trying to turn up in here on a daily. Weekly's buried still. It's going to have to do a lot more work than what they're doing now. Let's put it that way. And wow, what a smackadoodle ride. You know, down, down, down she went. Wow. Not much to be said except for obviously the central banks do not like the metals complex. Do not likey. And you know, there's another reason too. We don't usually talk about it, but today they've been talking about it on the news, and that is, you know, with all these electric automobiles that the socialists in our country want to have, you know, there are all kinds of sweeteners by the socialists. They're trying to pass this legislation that even if you make like $500,000, you'll get like $12,000 to buy an electric car. I mean, you know, they're just trying to put sweeteners out there in every direction. So they need the copper, of course, and they need some of the silver. So I guess they want to keep that cheap as best as they can. Let's take a peek of the copper. Right there. Copper's trying to lift the last couple of days. Boy, it's locked in that $4 area for a while now. There was a time it never could. Look at that. When you squeeze it, squeeze it, squeeze it, it's like $4 is like the floor now. See it right there. What is that? That's back in March. So almost a year now. It has found a way to stay over the $4 area, and every time it even gets remotely close, it finds a way to lift back up again. I mean, you see, we're in a weekly sell now for 3 weeks, and it's trying to battle its way into the buy right there. See what the copper looks like over here, right there on J4X. All right. And that is pretty much the metal side of it. Let's take a look at platinum. I guess it's like I want to use words that we would use in the 1960s and 70s and 80s, but you can't use those anymore. But let's just take a look at platinum. It's definitely the runt of the litter. Let's say that. It is the runt of the litter. But it really does, you know, it really does do some really wild things there, you know. You know, the product that was always considered a really good product, you know, would trade over gold. You know, rarely ever discounted itself. Now it trades at half the price of gold. It's like, oh my God. It's like you know, it's so hard to me. You know, it's just so hard to believe, really. You know, to see that, you know, see that happening itself. That's the thing that blows my mind more than anything else. That is the one that blows my mind. Indeed. Anyway, let's see who's left. I guess we could take a look at. I think we started off with gold, so there's no reason to chase after gold. But with all these electric automobiles and everything that everybody's talking about, it's kind of like you pretty much need to just kind of figure that that must be part of the Federal Reserve concept. You know what I mean? That's the only way I can see it. Yeah. All right, now, where do we go from here? So we've looked at gold. We've seen all. Oh, we didn't look at the energies as close as we could. Let's take a look at natural gas and heating oil. I mean, it's it's a mild fall, I guess you could say. So here in the States, so we're not really seeing a lot of wild action in this stuff. See right there. Where's it at? Nat gas. Right there's nat gas and Jan. And it's been in a slide, it's been going down. I mean, we've been in the daily sell since here. We've been in the weekly sell since up here. Since that wild spike of 33, I think it was $33 in Europe for the same that we're paying like here. It's like, wow, $33 move. Ouch, definitely ouch. Let's see, Middle Age says there's a grain report coming out Thursday. Could you check March corn and beanies? Sure. Let's check them out. As we say in the 60s, what it is what it is. Let's see, right there. Loading it up, as you can see. There we go. And then, let's see, what else can we point out here? And we got corn up there. You see cornucopia. So there's the corn. And you see corn has been a daily buy for a couple days, acting pretty well. Maybe they're front running this thing. It's been in a weekly buy for a while. What's that? Back in September. Since the low, what was that? 540s, 530s? 520s, something like that, right around here. So 525, and we've gone to $6, almost a bushel. So that's a pretty good move over a 2.5 month period. I saw someone put out a report saying something like they expected to see a 27% return in the commodities in 2022. Oh, I love when they put those reports out. But anyway, there it is. There's the corn. So now let's see what the beanies look like. Oh, you know what? Let's do this too. This is March corn, and I think it's May corn or July corn. Let's take a look and see. Is like the higher priced one. So, as a matter of fact, I can do this. Let me do it this way, and I'll know instantly. Let's see, where are you? Right. Where are you? Exchanges, there it is. All right, let me take a look at the corn and see. I think it's the May one, maybe. Let's see. May corn. I want to look on another thing here. May corn. There. There's the corn. Okay. So May corn is trade. March corn is okay. So May corn is 2 cents above, and July corn is half a cent below. Okay, so it is the May corn. Let's take a look at May corn. There's September corn. That would be like new crop, won't it? There's May corn right there. You can see that doing the same thing. Only this is the second day in a buy there. See that right there? There we go. Whereas the March corn, the front month, let's go back to that again. You see it's been a daily buy now since Bakheya, and been pretty firm throughout this whole mess. Now they're both on a long weekly trend. Let's go back to the May corn again. May cornucopia. You know, since the beginning of September, or the end of September, same situation. It's been in that same weekly buy there. Now let's slide over to beanies, and we can put beans up on the J4X. Let's do that. There it is, right there. There's a front month. There's the weekly. Let's go back to the daily on that. The weekly looks like it's firm also. And you can see here, there's the front month. It's 4 weeks in a buy, just the way J4X is here. J4X is at least two weeks, if not more. See? Yeah, see, it's the same thing. It's in a weekly buy for a bunch of weeks here. See that right there? 4 bars green too. Then we have somebody that follows May. Let's check out May. Right there. There's the May corn. Sorry, May beans. See that? A couple days in the buy. Been in the weekly buy too. Was that? No. There's something odd about that. Oh, maybe it has to move over like that. That's what it is. So it's in a weekly buy since, where is it? The beginning of November. So I was pushing along. Let's see what just go back to this one again. So that was a week later it went into a buy. That's right, I remember that. So this one just missed it, but the back month got through it. I thought that was interesting at the time. Yeah, they do, you know, but they have been the sloppiest. They're interesting, you know. It's I want to say it's funny you say that. I'm still long my March 5 55 calls. Nice. I really find the beans kind of interesting. You know, the more I look at them every day and week, I'm a little surprised. They fell down from like 14, which is kind of high for beans. But when you really think about the idea that oats are at 8, you know how I always say, if someone asked me in 2007, if someone said to me in 2007, okay, you know, this is going on in the world, this is going on in the world, and you know the Federal Reserve is doing this, and these banks are out of business now, and these are owned by, and Lloyd's of London is owned by the Exchequer now, went out of business. If you said all those things to me then in 2007, I would say, you know, and then someone would say, where do you think gold and silver would be? I'd be like, oh, between $5,000 and $10,000 an ounce, you know, something like that. You know, I'd be thinking that, you know. And so if someone said to you, oats are trading at $8 a bushel or $7.50 a bushel, where do you think soybeans are? I would think like 17 or 18. You know, I think something like that. You know, but they're not. You know, and so that's the thing that always is in the back of my head. Are people selling soybeans and buying the other products? I mean, we've got red wheat, you know, trading in the 8s. You know, we've got you know, regular wheat trading in the 8s. You know, we have corn hanging out in the 6, just underneath the 6. But we have beans trading in the 12s, which is kind of curious, you know. You would have thought it would have been higher. It's kind of like a pairs trade. It's like the poor platinum. They have to find something to beat up, you know. Look at it. The best they could do back in March, April of last year is push it up into the 14s. Within a month and a half, it was playing with the range we are in right now, really. In other words, they drove it down to the 12s, 1244 there. See, they take it back to 14, fail. Take it there again, fail. And at the same time, you know, we're looking at like oats. Now look at oats. There's March oats. Okay. And you go back to the same time period. Let's widen that out a little bit. There's the April, March. Oats are trading at $3.75, and they've gone to almost $8. They almost doubled. Okay, what's the high there? 7 something another 775. Right, they've doubled. I am perplexed when I look at some of the other product areas, and then go back and look at soybeans, and I go, wow, what's that all about? Is that the new nouveau hedge? Is that what that is? I mean, that's the only way I can figure it. I mean, that's where my head's at. I look at that and I go, that's a good possibility. I mean, they may sell soybeans because they figure, okay, the crush spread and all that other stuff, and then you see the way they do that, so. I guess that's the only way to really, I don't think there's any other way, I really don't. I don't think there's any other way to interpret that than like the way platinum is trading at $900 an ounce, and gold is trading at $1,800 an ounce, and the Lloyd's of London is owned by the Exchequer. I mean, when you put those three together, that's definitely not. I mean, if I said to you in 2007 or 2009 even that, oh yeah, gold's will be trading at 1,800, where do you think platinum is? I'm figuring 1,900, 2,000, at the same time, oh yeah, and guess what? The Exchequer, the Central Bank of England owns Lloyd's of London now. They're out of business. Really? Gold's only trading 1,800? So it goes on and on and on, And that's where, that's where it's all about. And that's where we go, And what else can we say about either of those, in the end result? I mean, when you really take it all together, so now you take, you're taking soybeans, you take a look at, British pounds, you look at the Federal Reserve, you watch the euro, the way it trades, and you go, none of this matches up. The only thing that keeps me, happy and moving along in a webinar every day in trading is the fact that our quant keeps us in the winning side of things. After that, if it didn't keep us in the winning side of things, it would be impossible to trade. It really would. Because obviously the fundamentals don't match up anywhere near there. Everything we're discussing right now goes right up there with the beginning of the webinar, where I'm complaining about the idea that the Federal Reserve is, the big bully on the block, and there is nobody to seem to push it back. And not I mean, not to constantly always beat up on China, but come on, China. I mean, you don't even have a currency that floats. Come on. If you're going to try to be competitive, at least start off with a currency that floats every day. They took the Hong Kong thing where they have it fixed against the dollar, so they keep the Chinese yuan fixed against the dollar, and they move it up and down, the government. So, I mean, it's like, are you kidding me? At least the ruble floats every day. It's a free-floating thing, and you got to wonder, are we looking at a long-term capital management situation in the future to China? So in other words, one day, just like long-term capital management with, brilliant people, you had the legendary chairman of the Merrill Lynch, at the time, open up a hedge fund in the 90s, early 90s, late 80s, I guess it was, and they had, I think it was Scholl, from Black and Scholl, from the theory of volatility in options, and I forget who else. There was a third person in there. They were legendary names, and what did they do? They put the world into a cataclysm of disaster financially by doing, I guess that Scholes used to say, we're picking up coins in front of a steamroller. You ever seen when they're working on the road and they have these giant wheeled machines that pressure the road down? It's a big giant machine, and it's got a big round wheel, and it rides over the new laid road to press it down. And he used to say, we are picking up small coins in front of a steamroller. That's what it's called, a steamroller. and it ran over them. So, when you look at all these cross products, you just shake your head and go, wait a minute, this doesn't make any sense. Why is platinum 900 and gold is 18? Why is soybeans hanging out at 12.5 and oats are trading close to 8? It's like, what? And it's the same way in the currency pairs. Matter of fact, what's fascinating in the currency pairs, the major currency pairs have basically, how do I describe this? The major currency pairs have become a little less major, and the minor currency pairs have become more major. And that's literally, that could be the theme of this whole webinar this morning, is the fact that we see that the majors don't have, are not the same as they used to be. And you can see the minors are way more liquid than they've ever been. So you put the two together and it's like, it's a whole new world order. A new what did Mr. President Obama, former President Obama used to say, what do you call it? The new normal. It's the new normal. I doubt it. He tried to convince us that we would never grow past 2% also. And Mr. Trump came in and shook that one up. He showed how a good businessman can definitely run a government much better than a lifelong politician. All right, let's see, where do we go from here? I guess we go back over, we can take a look at the current, the stock indices unless someone wants to see something. But let's go check out the stock indices right there. So there's the Nasdaq. We show it also up here on an intraday basis. Let's see, where's that? Right there. So there's the Nasdaq. It's kind of flattened out the last hour or so. And you can see here, this is the daily. Let's go like that. And there's the daily on it. And it's trying to climb up into a buy. It failed at it yesterday. And it's in a weekly sell from last week. And obviously it's crazy. But I'm sure we're, giving up some of that nice profit we made on this move out of it. Let's see, right here, let's take a look at the Dow Jones Industrial Average, which is this one right there, flattening out also. And, it's up like 350 points. And then we go back over to here, and we take a look at that right there. And you can see that one went into a daily buy yesterday. That was been in a weekly sell since back here. And that was a nice little slide there. And then we go into the daily buy on Monday. You can see this thing's trying to get to the zero line. I'm not totally convinced this means a lot in any direction at this point. Just, I think, if nothing else, to me, it's just window dressing. And it's just, just the end of the year. That's all it is. This is where, we get sloppy in the math. Everything gets crazy. All right, one of my last sips of the tea. There we go. We've had our tea throughout this webinar. Now let's take a look at who's next. The S&P 500. Remember, this one over here is the Tech 100 on Dukascopy. That's what that is. The Nasdaq 100. Where's it at? Right here. Same situation. The S&P 500 has flattened out, on an intraday basis. And let's go check it out over here too on the J4X. Right there. Where is it? There it is, right there. You see, it closed in a daily buy yesterday, but it's been in a weekly sell for a couple of weeks. I think it was actually back here. So, and then it joined in here, but not. This is just the end of the year. Everything, traders. That's why traders used to go away. That's why hedge funds closed basically hedge funds to a great extent. They flatten their positions out going into like October, going into November nowadays. When I was young, they wouldn't do that, but nowadays they do that. They started doing it back in the 2005-06 era, 2003. They started realizing, why give up the last quarter? You're up like 15%. Why give up 3 or 4 or 5% from sloppy end of the year trading? And so they do very minimal trading now. Markets are thinner. You know, the window dressing is stronger. You know, the whole bit. You know, the whole game is constantly like that. So that is that's the way you look at these three indices: the Dow Jones Industrial Average, the S&P 500, which is up on J4X at the moment. Let's just show you that again. And there's the daily. It'll turn here. Oh no, that's a weekly. Yeah, so it's doing the same thing. It's got that pressure on it, just like it does on the J4X. Let's take a look at the daily. And let's see, what else could we say about any of them, really? I guess that's about it when it comes down to trying to interpret their actions. You can see there, it's trying to turn up also on the J4X, just the same way. And there's not much more that they can do. I mean, it's the end of the year. It's very sloppy trading, and in my opinion, I try to be very neutral this time of the year. A little intraday trading, position trading, it's very short-lived. If I get into a position, I get out of a position when I have profit. Boom, gone. You know, don't wait around. You know, that is probably the answer to all of it until the end of the next 3 weeks. That's pretty much what it comes down to. All right, traders, I guess that's the end of the day. So, happy trails to you until we meet again. That'll be Wednesday, happy hump day. Happy trails to you, to all our trading friends. All right, traders, this is Doc from North America saying, hi-oh silver.